Good turnaround Tuesday, everybody. How's everyone doing today? Let's see. So, I'm showing my hair because we'll be talking silver. Starting off with the gold-silver ratio. Hello, Alexander. How are you? Mark. Who else is here? Kevin's here. Same to you, buddy. Mark. Didier. Oh, come on. Stop it. Scott, how are you, bro? Hugo. TJ. All right. Can you see my screen? How about now? You got it? Okay. So we had this big breakdown here in the gold silver ratio and the RSI reading. And let me get rid of you guys for a minute. So this was the lowest RSI reading before we diverged down here for a bounce. So it's under 30. But when you look at this as a breakdown, and silver's much weaker today than gold, even though gold's getting slammed too. So back above this double bottom, you'd have some type of false breakdown. We're still a couple hundred points away, 150 points away, but I would be careful. No audio. I think you guys could hear me. Must be you, Ren.
We can hear you. Good morning.
Hi,
Check your Zoom.
So you can put up a little stick it says unmute your computer because everybody else can hear me.
Okay.
I actually used to stick it like that because people would say, I can't hear you. And it's like, you can't say anything to them, right?
Yeah, that's true. Yeah. I know.
I
keep trying to talk to him, Blake. You're right. So anyway, this is what
Anyway, good morning.
Yeah, this is what I wanted to show in silver, okay? Because I showed the speed line yesterday, and we had a throwover. You know, I tried that line Sunday night. It blew through. But what a nice pivot. You know, on the first pull back to the throwover, it held. Then we closed. And we never really could close back above 29 once we took it out. And, you know, CFTC is looking at what's going on in the silver. You know, I can't say for sure this is a high, but I'd say that a lot of people that came in yesterday might feel trapped. Anyway, $29 is a pretty big pivot from yesterday. So for silver to resume its uptrend, we have to take that out. Okay. We believe the news begin. Yeah. Yeah, it's you know, the Reddit traders are going to learn that, like I said yesterday, it's easier to squeeze a small cap stock than a global commodity market. Okay, so anyway, much weaker than gold. Gold doesn't look so good. Gold really never got going. Looks like it's, you know, on the verge now of breaking down. Yeah, you know, the pound rallied back to 37 and came off. So we'll see. It's going to look pretty negative under 36 and a half. And then the big area is going to be 135, 136 down here. And Euros, you know, a lot of people are calling this a breakdown. It could be. You know, you had this little flat triangle. We're under 120.50. We're not making new lows in the RSI in the 4 hour. We are on the 2. And I don't have a reason to buy the euro. Okay, there's no reason. Aussie might finally be breaking down. Tried to hold. It's right there on the cusp. And the S&Ps, you know, I tried it at resistance here. You know, it gave me a little into the close and took partials and then got out over yesterday's high. I'm not sure what to do with it. This could be a turnaround Tuesday. I don't know if maybe the bottom's in. So I look at NASDAQ and, you know, we're only 100 points away, 200 points away from new highs. I would say it's in here, good or bad from here, but I really wasn't expecting it to take out this resistance. So just like the silver is a good pivot right there at 29, keep an eye on this pivot here at 37.82, because once we got over it, we went to new highs. We had this, but then we tried to rally back after the C wave started, and we went right there. And I thought we were going to have a third drive. I'm not sure. It still could happen. I thought it would happen from a lower level though. So I don't know what to do with S&Ps here either. So and now you have the VIX back under the breakout at 29. So that's crude's making a new high here, 54.81. So new highs in crude. Crude was kind of a very nice tell because with risk off all that, most of last week, crude didn't budge, just moved sideways, and here we are at new highs. A couple of non-confirmations, not on the 2-hour, a little on the 15, but for the most part, not much there. So that's my look. I want to get the guys in. We have about 24 minutes of analysis, and I'm going to be talking to Jake at TrendSpider today. They have great software. Also, Jake's a great analyst, hardworking guy. So looking forward to seeing what Jake has on his radar. And good morning to you, Blake. How you doing today, buddy?
Hey, good morning. What's happening?
Well, $29 silver is an important pivot, and I believe you had some type of fib extension target at silver where you thought we'd get a pullback from that level yesterday, and maybe it hit it before it came off.
Yeah, as you pointed out, Dale, the trying to get the market to squeeze silver is a little bit different than squeezing GameStop. But, silver is one of those, you can you can build the argument for being long silver. Stelios has been building it for 5 years. So, I don't think the argument's changed. And to be quite honest, I think that the risk for silver continuing to move up in, the current environment is valid. But yeah, we did hit 161% extension, or really close to, and it's $30. I mean, at $30 on XA, on the spot price, it's a big round number. So we basically hit $30 and we pulled back. I don't see anything that's disrupted the uptrend. However, I know anybody who's long right now is probably frustrated they're long. I got asked yesterday, in the chat rooms, like, hey, should I be buying silver on this pullback? And I'm like, well, if you buy silver, you just have to know where your risk is. Like, if you buy it, excuse me, this was yesterday. If you were buying it here at 28.30, your stops are probably below 28. You know where your risk is. Don't make it any more complicated than it is. If you want to take a shot at it, take a shot at it. Just keep your stops tight and let her go.
Did they raise margins, Blake? Do you know?
What's that? Oh yeah, they increased the margins like by 18%, I think.
Yeah, see, that's part of it too.
Yeah,
okay.
yeah. That was a bit that I forgot about that last night. I haven't been paying much attention to silver. I'm actually focused on what's happening in the Aussie. Speaking of which,
yeah,
I want to talk a little bit about the Aussie this morning because the RBA actually extended its QE program by another 100 billion Aussie dollars. So that we have seen currencies respond positively with if they offer more supportive monetary policy. We've seen their currencies act positively in that respect. But this is not one of those situations. Right now, we're seeing the Aussie actually come under some pressure. I think that was early on in the early parts of COVID, we were seeing, okay, central bank is supporting their economy, so the currency did better. Now, what you're seeing is, yeah, if central banks are adding more liquidity, that's actually going to start weakening the currency, and so that's what you're seeing in the Aussie dollar. And you look at the Aussie, it is really on the cusp of moving lower, and I think the risk here is if we break below, you know, these lows in a solid fashion, meaning, you know, we really start, you know, getting a daily close below here, it's probably going to, you know, we're probably going to sell off towards the 38% retracement. And I'm not even talking about long term. That's actually more near term retracements. It's just a 38% retracement of this. Longer term, the Aussie dollar has, you know, depending on risk aversion or risk appetite, it's got a lot further to go if we really decide to sell off. And that's not, you know, there's no guarantee that that's going to happen, but I'm just saying that if we do see some equity market weakness, then that's probably going to, you know, we're going to, you know, see some more Aussie dollar weakness further than just 75 cents. We might actually break through 73 cents and make our way towards 70 cents once again. And I want you to keep an eye on other Aussie pairs. It's not just the Aussie dollar. Excuse me. The pound Aussie. You know, I think I talked about this yesterday. I can't remember if I forget which days I talk about what, but the pound Aussie, I'm bullish because we pivoted off of this long-term multi-week support, but we're above 180 today. And this is a 50% retracement. Let me just get rid of this extension here. Remove that for a second. Okay. So you can see we're at the 50% retracement at this 180 level, and a break above this 50% retracement, then we're testing the 200-day moving average. And if we could break above the 200-day moving average, that's when you start getting, you know, some momentum higher. And, you know, I'm looking at the pound. You know, the pound is a little bit at risk right now because we're in this ascending wedge, and it's not, you know, it's we're not breaking higher as of right now in the cable. But at the same time, I do think that, you know, the pound will probably hold up relatively well in comparison to the Aussie. So, you know, the sterling may pull back to 135. You know, we come out of this wedge and we might hold some of these trend lines down here at 134, 135. But if that happens in the sterling or in the cable, and the Aussie actually pulls back a little bit, and let's say we pull back towards 73 cents or so, that means the pound Aussie is substantially higher. You know, the pound Aussie is probably trading at 184, you know, 188, somewhere up in this neighborhood. And I could see that in a risk off type of environment. So I want you guys to kind of focus on some of these cross rates. And it's not just the pound Aussie, and it's not just the Aussie. I mean, look at the pound against the euro, right? You got the euro sterling breaking down. And I guess one last thing I should talk about before I turn it over to Stelios here. I'm not sure if Steve is here yet, but
he is.
Oh, okay. Hey, Steve.
Hey, Mitch.
Is the euro dollar some pretty big dollar, you know, well, I should say euro weakness right out of the gate this morning or overnight. We had the euro, you know, break through the 120.60 level. It looks like that was stop related, which makes a lot of sense to me. You know, the stops are getting triggered here. But the euro is at risk. I mean, you know, we start breaking through 120. I don't know where we're going to go. I think we could, if you look at the broken trend line, it's this pink one, right? Or magenta. I mean, that takes us all the way down to 115. Do I think we're going all the way down to 115? No. But if for some reason we saw some, like, let's say, COVID accelerates and we go on lockdown again, well, yeah, we'll see some massive risk off, and I'm talking here in the United States, and stocks sell off, and the euro, slumps to 115. That could happen. I don't foresee that happening, but I still think that there's a risk that we could pull back into the teens again, especially if we break below 120. So just keep an eye on the euro. I think it's walking a very, very dangerous. It's in a very dangerous spot right now. Okay. All right. Steve, Stelios, how you guys doing?
Good morning. Very well, thank you.
Good morning.
Morning.
I'm gonna turn it over to you guys because I'll be back in approximately
1 hour.
1 hour from right now. And everybody, if you're a ForexAnalytix subscriber, you should have gotten a separate email that will give you the registration or the link to join the FACE webinar part 2, where we do the bias chart. And for some reason, if you can't find your email, you can also log in right here on your ForexAnalytix.
Now they should also have received their first 1 hour reminder email about it as well, just
Got
now.
it. Okay, cool. And so there you go. You guys should have your links. And like I said, if for some reason you're like, check my junk mail or whatever, I don't see it, just log into ForexAnalytix. This little icon right here, it'll allow you to join up through the app right here. So
Jock got it. I got it. So
yeah,
it went out.
I checked
It
the
went
people in the chat room, and everybody in the chat room got it. So I know Steve is really good at making sure all that stuff gets goes out the right way. So anyway, how you guys doing today? I know we're looking at silver right now. What do you make of this move, guys?
Well, we were talking about it yesterday, and we're talking in the chat room about it after the move. And I said, you guys know I'm bullish, and I said, look, I want to be buying on dips. It obviously helps to be long from lower levels, because we had a couple of friends asking in the chat room, where do I buy? Where do I buy? I said, look, if you're not long already, then you really want to ease into it if you want to be long. So I was lucky I got in early. I added some at 27.50 this morning, and I want to add more. But for now, I think this is it's a reasonable reaction from a 10% day or whatever it was. So I still think that the technical damage, let's say, that's been done will push silver higher. Of course, it can be quite volatile, as we do know it usually is, but I think we're going higher.
I think silver, I was just knowing that we rejected this resistance up here at $30. I personally, I wouldn't be surprised if we're just building some sort of like wedge, and you see, a dip back down to 26 and consolidation before an eventual break higher.
Might be the case, Blake, but I've had this discussion here on Face with Stelios, and what we talked about, because it was also the day, we were talking about like the madness with GameStop, etc. I told him that, listen, worst case scenario, oppositely from all the mania crowd that is buying worthless or almost worthless stocks, hoping that they're going to sell it higher. In my opinion, the huge difference with silver is, first of all, it's not easy for a retail crowd to really squeeze silver. It's a much more liquid market. But on the other hand, even if you end up buying silver at a not so appealing price in the short term, the big difference, in my opinion, is that holding to it, is going to get you in the money sooner rather than later. So I'm afraid that people that bought GameStop at like $300-400 have a huge chance of never being able to make a profit. But even people that got caught up in this squeeze and bought silver at $30, I'm pretty sure they're going to find themselves in the money if they're patient enough.
Yeah, well, let's hope they don't have options that are expiring shortly.
Oh yeah, that's a different story, of course.
Yeah.
That's a different story.
That is a different story. So it might take some time. Anyway, all right, Steve, Stelios, good to hear your thoughts. I'm gonna pass it over to you, because I'll be back here in an hour with the rest of you guys to do the bias chart. So
thank you, Blake.
Thanks everyone for being here. Have a great interview with Jake. I really like Jake. he's a sharp guy. He's really been actively trading the equity markets, and he's got a good beat on the market. So
yeah, passionate and hardworking is
Very
a couple
much so.
adjectives
Yeah.
I'd use.
I really like him. All right.
Yeah. Thank you,
All
Blake.
right. You love him?
I love him.
Do you like him, or you really like
You
him?
like him, like him.
Like, yeah.
Really.
All right, a
Okay.
bromance brewing. All right,
There it is.
hey guys,
Thanks, Blake.
we
Hey,
all know about your bromance, you two.
Oh
You
yeah.
guys, except you guys bicker a lot.
For me, it
Right?
started when I saw him in his pink bikini. That was it for me.
Yeah.
His ballet got me, man. That's what
Yeah.
Right. To finish off with silver, I'm just going to add that it depends on how you trade it. Exactly like Blake said. I personally traded unleveraged. So in the last position I had, which I got long just under $15, and I got out at around 24, 25 because I scaled out. I had zero leverage, and during the COVID crisis, when we went below 12, I just didn't care. I said, look, I'm not stopping. I know this is going higher. End of story. Obviously, if you're leveraged, you have to be very careful
You
with your
worry,
stops and everything. Yeah, and
Yeah.
your timing and everything. Obviously, if you're leveraged, you make a lot more. But it's all a trade-off. Anyway.
That's why money makes you more money if you're prudent. Because let's be honest, it is a big luxury to be able to trade unleveraged. Because, for example, buying silver at $12, and I know somebody should never use this word in trading and investing, but it had zero chance of not making you money eventually. It could be a little bit sooner, it could be extremely fast, it could be a little bit later, but I mean, think about it. We have a huge debasement of fiat currencies, and silver is an actual commodity used 70%
solar panels.
in industrial production and 30% in jewelry. I mean, we're talking about an actual commodity with actual usage. It's not only like as a secondary monetary metal, it's an actual tangible commodity that is being needed and produced every single day.
Yeah, we've talked about it
really
times,
used a lot in the green energy space. I think they use it in solar panels, etc.
Yeah. Medicine as well. But anyway, you're absolutely right. We've talked about this a million times on Face, and I agree 100%. Okay, so enough about silver and gold. Obviously, the same. Gold actually never broke out, and it's down a bit today. So
this divergence with gold is still playing out in essence. And look at gold. Actually, gold is. I mean, this looks to me like a nice bearish pennant, and it's making an attempt of breaking lower today. So the implications, obviously, if that's the case, is that silver is going to keep correcting lower. Although, considering the recent blowout move higher, I think that there is a very, very high probability that silver is going to maintain trading above the broken channel as gold is still consolidating within the channel. So I think that silver is leading and will keep leading gold as this correction comes to an end. I think sooner rather than later, this correction is going to come to an end. At the same time, for me, important developments, quite expected from a technical perspective. I mean, it was yelling. Crude oil breaking higher. I mean, look, this type of move here, there is such a low probability that this move would get resolved to the downside. I mean, it can happen, but this was a textbook bullish consolidation, right? On the other hand, pay close attention because there is a very high probability that this thrust higher that we're looking here is going to be terminal in the short term. So meaning, after we have this move higher play out, which might play out, rather fast, I think that we're going to see a deeper correction in crude, which hasn't had a deep correction actually since finding a low, right? Even this correction here was a correction in time than in price mostly, while at the same time, and we warned about it, natural gas seems to be blowing out here. I mean, second consecutive day that it's extremely strong. I think the correction is over. It's done. That's it. finito. I think we're headed higher. As simple as that. What else, Telio? What else did we have?
Just a couple of little things. I mean, nothing major has changed overnight. Again, it's been a relatively quiet week in terms of something changing on the macro level. But we did have two little things I want to talk about. First, the German government said they're going to continue with how did they say it exactly? They don't see an end to the to these measures until June at least. So
I think it's a very conservative approach.
we have said that before. So it looks like this summer again is going to be maybe another wasted summer. Let's see. But that's what they announced. And we also got GDP out of the Eurozone, minus 0.7%. This is for Q4 last year, minus 0.7%. We were expected at minus 1.1 or minus 1 or something like that. So a little bit better than expected. And, it seems to be after obviously the horrific quarters post-COVID, we seem to be going back to at least not contracting much anymore. Minus 0.7% in the old days would have been a disaster, but obviously now it's not. In relative terms, it's not a big deal. And they're still estimating growth for this year and next year. And let's see what happens. But if we do get lockdowns,
I wouldn't be that optimistic as they are, to be honest, Stelio, because we're seeing countries going in and out of lockdowns all the time. I can't possibly fathom how that is positive for growth. Yes, we've now found ways to have somewhat the economy remotely working better than it did in the first lockdowns. So yes, activity should be a little bit better than what it was at the initial lockdown, which was a shocker. But I mean, nothing in comparison to what it was pre-COVID, right?
Yeah, and yes, they did say that we're going to remain on a state of emergency until June at least. Thank you, Jack. I was looking for the wording, but yeah. So being in a state of emergency and GDP growth kind of doesn't go together, but
yeah.
Let's see how that goes. Otherwise,
yeah, I saw a guy from Harvard who just wrote a book, Variance, and he's very, straightforward and not really, an alarmist. But he actually said it could take, 10 years. Some people that are optimistic said post-COVID world 2024, but he's really worried about the variance this fall, this winter, comparing it to, we'll have some easier days here in the spring, summer, but he's worried about the fall when the variants become the dominant one, and the vaccine will only blunt.
People that listen to us daily have heard months ago that they should consider 2021 a lost year as well. And
that I was just getting used to until I heard, that's not necessarily true. I mean, even Fauci said things would be back to normal sometime later this year, and now people are retracting. But there weren't variants. They made the vaccine for, the first go round.
Yeah, I mean, speaking about the vaccines, the good news is that we're seeing pretty good vaccine rollout. Not in Europe that much, but in the US and the UK as well. That's definitely going to help for sure, obviously. But
unless because that's the
they made it for the first wave.
That's the bad case scenario now. Unless some of the mutations of the virus prevail and prove not to be covered by the vaccine, because we already have two main mutations, the African one and the UK one, and still not conclusive data if the vaccine actually protects against them.
Isn't it amazing how I still remember we were back in April, May when COVID was really hitting, and I remember people saying, even though all these specialists came out and said, look, don't be this is not going to go away straight away. There's always a second, a third wave. It mutates, it does this and that. And, everybody you heard, analysts and economists or
Bullish.
whatever, they were like, no, this is going to be over. And this
Yeah. Bye.
Listen to the, obviously saying buy, they were right because markets are higher, but
Yeah.
that's not because things are going to be, COVID is going to be eliminated or something. But
yeah, it's what I've said before in one of my rants. The only reason, I mean, the problem with the media is that they try to find, they try to find some kind of context to excuse price action. There is a context. It's very simple, and they don't need to be looking around. The context is very simple. As long as monetary policy approach is the pedal to the metal, as long as central banks are telling governments just blow away the budget, we're going to monetize everything, the markets will more or less remain very well bid. As simple as that. Anything else is just storytelling for people that are naive to be reading the news and thinking that they have an idea what's happening and why it is happening.
Yeah. Dale, is our guest here?
Jake that's the guitar.
Hello, Jake.
Jake is here.
Good.
Okay,
right,
perfect. So, just a reminder to everybody that's a ForexAnalytix member, you should have already received, as Blake said, a registration and a reminder email about the second part of the webinar, which starts in 45 minutes from now. We're going to open the room earlier, of course, so you can log in. In case you haven't received it, check your junk mail. And in case it's not there as well, contact us through the ForexAnalytix intercom button, which is at the bottom right of the page. But you can also log in by using the widget that Blake showed in your ForexAnalytix platform. Okay, so enjoy the interview, Dale. And we'll be back in a few minutes.
Okay, for some reason, when I have 6 panelists, it doesn't show the 6th on mine. Maybe I have
you can expand the window if you want. I can see Jake. He's unmuted.
Just scroll down.
I'm all scrolled all the way down.
Oh, I can see him.
Okay.
He's unmuted.
I can see him as well. He's unmuted as well. Jake, can you hear us?
I'm here.
Oh, okay,
hey,
we can
Jake.
hear you.
All right, I'll have to figure this out.
Very well.
All right. Anyway, thank you guys. It's because we have, anyway, I'll figure out how to expand the window. Jake, buddy, how are you, bud?
Hey,
how are you?
Good. How are you?
Good. So you know how to share the screen. I'm interested in what's on your radar after last week and, major moves and short squeezes and
those are not on my radar personally, but I've never been a person to really get into any type of stock that's already kind of made the move. And when people that I've never even met before at a get together or something are telling me, about a stock, that's generally when I like, okay, this is definitely the top, which was interesting. GameStop kind of is just absolutely tanking today. What I'm looking at is I generally look at leaders and laggards. So I'm looking at the leaders to get an idea of what's kind of hot. And then I'm looking at the laggards to see what hasn't moved yet. So we'll just look at SPY real quick, just to get an idea of kind of the overall strength of the market. We had a nice pullback. I personally thought it was going to pull back more. But my opinion really doesn't matter in the market. So, I've
noticed that.
Yep.
For me too, Jake.
Yeah. Isn't that crazy? So, I just kind of, I went to a little heavier cash than normal, but I didn't, try to be the next big short, trying to short the market. I did think there would possibly be some liquidity issues with, Robinhood and maybe a couple other brokers, but, it seems like Robinhood got, quite an infusion of cash, to help out. But I do think there was quite a liquidity issue there. But on the SPY, essentially what we did was we really just moved back down to pretty much where everybody was break even. And when I've come on the show before, the main thing that I like to talk about our raindrops, which I know you love the raindrops,
I
but
do.
also,
Your
you know,
VWAPs.
the volume weighted average price from
Yeah.
specific areas. So
Yeah.
you'll see here, essentially what I've done is I've anchored a volume by, an anchored VWAP from this breakout that we had after the elections. I also anchored one from this vaccine news that we had on November 9th. And you'll see how well these areas acted as a level of interest multiple times over the last couple months for price action. And notice sometimes they test the top VWAP, sometimes they test the bottom. But all in all, it's more of a zone, as always, rather than just one precise area. The other thing I wanted to mention here is this big area that I highlighted in green. And so what I've done is I've measured since we bottomed here on October 30th, when, where are a majority of shares holding since this point? That's what the volume by price is telling us. So, let's assume everybody or a lot of people are holding around the point of control, but you can see there's also a couple other volume nodes here creating more of a shelf. When we were way up in the 385 area, these shares were holding at almost a 4% gain, and that's relatively decent on SPY, an index. So as the price started to move down over the last week and a half, we pretty much went right back down to break even. And, everybody thinks that, oh yeah, but, buyers came in and pushed the price up from this area. Well, you do need buyers really to get the move that we saw yesterday. But, on Friday, the reason why we likely bounced here was simply because all of these shares were back to break even. There was no more profits to sell. It's a lot easier to sell something when you have profit. When you don't have profit anymore, you're less likely to just pull the sell trigger and you start thinking a little more. You're like, okay, well, I'm back to break even. I just had a 4% gain. And that's likely what happened is you're bouncing because supply is drying up, not necessarily because, this huge influx of demand came in. So that
is what you're saying. That's not the bounce isn't as bullish. Is that what you're saying?
Not necessarily. What I'm saying is generally when you get to these areas, the initial bounce is due to a drop in supply. Because as we're kind of waterfalling here, these are people panic selling profits, essentially, or a lot. Once you get back down here, people kind of let up on the gas because they don't have any more profits to sell. So this is your initial bounce, generally a function of supply drying up rather than just a huge influx of demand, because a lot of people don't like to just buy the dip on a day that's down over 2%. So generally
on a Friday.
On a Friday. So generally that selling pressure exhausts, and then you have a new day on Monday. People realize that the world isn't ending, and Robinhood is actually still liquid, which I was kind of shocked by. But hey, it's a big platform, and they have a lot
they
of money.
say Friar Tuck brought in about $3 billion.
I saw that, and that's
the merry men.
Awesome.
The merry men were out in the Sherwood Forest and brought in some cash. Yeah.
So that's something. One thing I think is interesting. As much as everybody says Wall Street bets and all that, we're moving GameStop and all that. I definitely think that was a part of it. But you look at some of the flow on GameStop and some of those other ones. Those were not retail traders making those trades. I mean, no retail trader is putting blocks of millions of dollars into calls. So
that's interesting, Jake. Why do you? Okay. So, what we're hearing in the media was, this was, a gathering of some of these social media platforms that just ganged up on hedge funds and created the short squeeze. You don't think it was social media retail. You think it was the pros that were behind it.
I think it definitely exacerbated the whole thing.
Okay.
A lot of, if you have 100,000 people coming in with an average of $500, that's $50 billion of capital being, moved into the market. So that definitely helped, but it wasn't just retail traders. And, it's one of those things that
it was hard for me to believe too, because, we were always taught, I was always taught to fade what retail traders were doing. This would have been like, kind of a turning of the worm that they are able to, in a group, be able to dominate hedge funds.
Yeah, I mean, it sounds like a great story, but at the end of the day, retail traders only have so much power, and anytime I see on social media some type of movement like I think hold the line was trending. Well, if it was actually retailers and everybody's quote unquote holding the line, there gets to a threshold where people don't care about these people that they have no idea. They care about the fact that they're up 300 or 400% profit, and they say, okay, maybe I'm not going to hold the line anymore. And you get this huge influx of selling because it's just a momentum thing. As soon as everybody sees red, everyone's like, ooh, maybe no one else is holding the line either, and then you get that pullback. And I think it was kind of brilliant that this whole silver short squeeze thing was a topic. As much as I don't think retail traders, caused this whole thing, I think they were part of it. And I think it was really interesting to see that I think a lot of demand started to leave, or at least attention started to leave GameStop, and everyone's looking at silver. I think the problem is everyone didn't realize silver is a massive
global
market.
Yeah.
And, GameStop and AMC are not. And so, it's one of those. But the things that I'm watching right now, I'll mention a couple, are CRM. Full disclosure, I do have positions in most of these stocks. CRM is one that's just really got this beautiful inverse head and shoulders here.
Salesforce.
If we start the volume by price from this November 9th high, you'll see that we're finally starting to kind of get a peekaboo outside of this volume shelf. And remember, the volume shelf is just an area where a majority of shares are holding. So if the price is above that area, I look at it as a level, as a kind of a launch pad for price. If you have a bunch of shares above, so let's say that we go to the...
What do you call that, Jake? A volume shelf?
I call it a volume shelf just because it's a group of nodes of volume. It's not just one point of control. So if we're on the weekly chart right here, I call this a volume shelf because it's not just the point of control that is really sticking out here. It's a group of about 4 volume nodes creating this huge base for price. And what happens is you have these areas, these gaps in liquidity above. Essentially, you can see since we bottomed in March, a lot of shares are holding in this 215 to 230 area. And then you really don't have a lot of people holding here. One, there's a price gap above, but two, this is measuring from March 16th. So, even though we did have price action within this area multiple times, there's still not a lot of liquidity here. So anytime you have a low liquidity area like this, it definitely allows price to move up quicker because you don't have a lot of break-even sellers above. Now, once we get up to, let's say 240, 245 to 250, these shares up here are holding at a drawdown, right? The price is at 230. They're holding at a 7%, unrealized loss. So as the price moves back up, they're back to break even here. They likely are like, maybe I'm going to take some off the table. I just dealt with this drawdown for like 2 months.
That's nothing.
And that's how you get this, that's how you get a little bit of a consolidation here, if you want to call it that. But here, I mean, there's not a lot of liquidity above for this thing. This thing's actually shown relative strength over the last couple of weeks as the market was doing some weird stuff. So this is.
Are you looking to take some off the table at that level? If it gets to 245?
Yeah, I'm in an options position. So I'm generally, just looking for that impulse move. I mean, if we did an absolute rip in the next 2 days into the gap, I'd probably just even take my money there because, with options, you really have to worry about, that initial move is what really drives the premiums.
Right.
And, with common stock, you don't really have to worry about that. But for me, especially if I'm still probably going to be out of the money in the calls I'm in, I'd probably and that's assuming we have a really big impulse move. If not, then I'll kind of monitor it. But for me, I would definitely just be looking at the gap because a lot of people are also looking at the gap. So we've got this gap above right around, let's say 238. Depending on where you start the gap, some people consider where the close is. That would be around 241. But yeah, for me, the gap the closing of the gap and the fill is pretty much a self-fulfilling prophecy. That's where I think a lot of people kind of start to hit their target as well. So that's
Okay.
where I would look for a potential, a potential area of taking some profit. So we'll see. Another one is HYLN. This is one that I've been watching now for about a week and a half. One of my friends actually found this, and I taught him how to use the volume shelf and some of these other features on TrendSpider. And he kind of sent me his thesis. And actually, this is more of a this is
Wedge.
more fundamental thing too, because
What is the company, Jake?
it's called High Lion, and essentially what it is it's a powertrain solution for electric vehicles and the commercial side of things. So let's say that Walmart wants to go electric. Instead of them having to buy, however many semi trucks, they can go in and they can just actually convert their trucks to an electric type of solution through this powertrain that they offer. So it's kind of a scalable electric vehicle play where you've got this technology that allows you to
Convert
without
combustibles.
having to put down all this capital to buy the whole new truck. And it's in that sweet spot for market cap. It's like $2.6 billion market cap. That's one that's a market cap right now that's really finding momentum. It's not like a micro cap. It's not in the hundreds of millions of dollars. It's still a multi-billion-dollar company, but it's also not $50 billion where it's not as easy for prices to move with when you have, that much liquidity. So, for me personally, I'm looking at this huge area, this volume shelf essentially. A lot of shares are holding here. And then all you need is a little spark in demand for this to act as kind of a launch pad for price. So this is the setup here. If you look at Big C is one that I traded over the last couple of weeks. Let's see if we can actually, is the falling wedge still there? Of course not, I deleted it. But essentially this looks very similar a couple weeks ago to this. So I think I had kind of this falling wedge here. I had the support, let's say right around here. And what's interesting about this is, you had the same type of thing on Big C. So what you had was you had your initial this weird pop that happened on a little increase in volume. Then you had this decrease in volume with decreasing price. And then you had your reversal. Now, if you look at HYLN, it's literally almost the same exact thing where you've got this little spike in volume. To me, this means that somebody was just really getting aggressive on their buys. Maybe it was shorts covering. I don't know. But, it's very interesting to see the discrepancy here where you've got this impulse move on the candle, and then you've got this sell-off on decreasing volume. So for me, that's what I'm looking for. I'm looking for that initial move, which tells me somebody really wants to get in. Once they're done buying really aggressively, you don't necessarily need sellers to come in to drop the price back down. What you need is you simply just need those buyers to cool off for a second. That shifts the demand curve, and the supply curve, let's say, stays the same. You naturally are going to get a price drop just because that huge increase in buyers is done for the time being. So that's how you can get these big moves up.
Doesn't it bother you at all, Jake, when you have a huge volume up day like that, and it actually takes out the low of that day with all that volume?
Yeah, definitely is something to consider. But also, this stock is very kind of jumpy.
Do they normally hold those big like that candle normally hold with a big volume up? Because you would think they'd be defending their position with all the volume that all the shares they bought in that candle.
Yeah, I mean, I think it depends on the personality of the stock. If it's a pretty liquid stock, you will see that. But there are stocks that just have, some people just aren't as strong holders in some of these stocks. And it's actually interesting that you will get some of this shenanigans going on where you have these technical rules kind of go out of the window. And, these bigger people generally kind of making the market have their own rules. And, it's interesting to see that you can get these undercuts of those previous lows and still see some interesting action. If we go to the weekly chart, this is kind of what I'm seeing. I'm seeing, that VWAP is way up here in the 26 area. We've pretty much done nothing now for like 2 months. And then you have all this volume, but you could easily undercut this volume here. I see it all the time. And then you kind of get your reversal. But all in all, I mean, I think it's one of those ones that if it doesn't, let's see, go back to the daily. If it doesn't really break out of this falling wedge, I exit the trade and move on. But, it's one of those things where it's a SPAC, it's an electric vehicle play. It's not Nikola or however you say that name, where they're trying to reinvent the wheel with the semi truck. They're just creating a technology that allows you to scale that whole process if you wanted to. So it's one of those ones where if it doesn't work out, it doesn't work out. But I mean, I could easily see this pulling one of these. I usually am scaling in during these types of times. Most people are like not. And so I do have a little bit of a different style than a lot of people. I'm generally buying some type of, I don't want to say weakness, but at least if there's some type of kind of coiling effect here. If we go to the weekly, the main thing I'm going to look at on the weekly is the MACD. I don't use lower indicators a ton, but I use the MACD as a general guide of what's going on. And you can see the MACD is just really curling very tightly. And you can see what happened last time the MACD was curling on the other side. You had a nice move after that. So, it's one of those things that's a technical side, but it's also a fundamental kind of idea. Now, MGNI is one that
Could I make a request with everything
Sure.
that's going on? I know that
Yeah,
this is your portfolio. I'm wondering if you're showing anything on TrendSpider that would confirm a possible top in any of the silver issues like Hecla or AG or, I mean, they really exploded. It's look at that, an island.
Yeah, I mean, the thing I look for most after a big move like this is just the gaps. So if you turn on what we call the gap snake on TrendSpider, you'll see there's quite a few gaps below. To me, that kind of tells me there's kind of some holes in liquidity. And it looks like, I think we're already showing this today on the chart, we have quite the gap down.
How about at the bottom, even though we were going up on that, Jake, we had red boxes for volume. It was going up on negative volume. Is that the case?
Well, so where the red volume comes in is it's a function of what this candle is. So you can see here that it's a dark gray candle. So whenever you have a hollow candle, you have your open at the bottom, you have your close at the top. So it's kind of like opening a window shade. That's why it's, you can kind of see the sunlight coming out. The solid gray candle is kind of the opposite. Imagine, your open is at the top, your close is at the bottom. It's kind of like closing that window shade. So even though we did close above the previous high, this is pretty much showing us that there was not strength throughout the day. The close was lower than the open. So that's why you get that gray color, but not red. So this, whenever you have a solid candle like this, volume considers it a red day. Even though it closed green, it still considers it a red day.
So maybe it was a harbinger that they weren't, white candles. The last three were all gray candles with the market in a moonshot that kind of shows that people might have been selling into it and distribution happening, even though it blew off like that.
Yeah, I don't like solid candles at all. Anytime I see a solid candle, it's a pretty big,
I think that's a great chart. Okay, it kind of gives you a different view of the silver chart. So there's GameStop.
GME, same thing. You had these solid candles here, so you could see that people were clearly kind of selling into this. But I think there were just too many shares that were short, and you just had this classic short squeeze. I mean, look at the top here. There were multiple solid candles like this, kind of showing that hey, even though this is the hottest topic literally in the world, my wife is from Poland, and I mean her parents were talking about this weekend, and they're in Poland, and it just became headline news. Everybody was trying to make $1 million. And that's what kind of bothers me on FinTwit about, people posting their profits and all that. Like, I think it's great, whatever, it's not, not my thing. But when you have all these people posting profits and, look at how much money I made on GameStop, that just creates a frenzy because people get FOMO. They get, they start to feel depressed because they're not part of the move. And that's how these horror stories happen. I mean, look at GameStop. It's at 126 right now.
Some people in Poland lost a few pierogies coming into today.
Yeah.
You like your wife makes you pierogies, right?
Amazing ones, yes.
She's
well, it's funny. They're pierogies, but they call them Ruskia pierogies, which stands for Russian pierogies. Those are the potato and bacon and cheese ones.
Oh man, Jake, can you? Yeah,
they're amazing, but I definitely probably eat only pierogies when I go to Poland. So that's
okay. All right.
Me add a couple pounds, but yeah, that's kind of what I'm seeing in the markets. I mean, if GameStop were to, catch any type of slight bid, what I'm looking at is here's your breakout candle, here's your anchored volume weighted average price from that status quo change, which is essentially the breakout.
Yeah.
This is where a majority of shares would pretty much be at break even because this is your average price per share paid. And it kind of goes back to that, supply dries up just because nobody has any more profit. So
I've one request from an attendee. Can you look at Ethereum? Is that what you want, Scott? When you say ether, maybe it just means ether. Oh, Ethereum. Okay.
Yeah, Ethereum seems to be looking pretty good here. If I were to anchor the volume by price, I'd probably do it from this capitulation on September 4th. And you can see there's been quite a bit of price action in history since then. And you can see still a lot of shares are holding right here. And you can actually kind of see the price kind of stair-stepping up this volume shelf. So, I mean, it's looking pretty strong. I mean, if I were just to quickly glance, you've got this really strong ascending triangle forming. And generally that resolves to the upside. So we'll have to see. I mean, it's interesting to see that for the most part, crypto's kind of taken a little bit of a break.
How about one more crypto look at Ripple?
XRP, alrighty.
And then I want you to let everyone know how they could get your software and follow your work.
Sure, absolutely. So Ripple, I mean, I hate Ripple, honestly. Ripple, and the reason why you see these types of moves here, you got these impulse moves. When was this? This was in November. Ripple is not a finite resource or a finite asset, whatever you want to call it, like Bitcoin or Litecoin or even Ethereum. Ripple has a lot of shares that they can dump on the market. So, if you're familiar with penny stock, biotech penny stock, any run up on a biotech penny stock generally gets sold off immediately. One, people take profits. Two, there's a lot of shares that can be
dilution. Yeah, they could. That's their currency. Yeah.
They'll
pay some IR guy, 200,000 in free trading stock to generate or do the work to generate volume, and the IR firm just dumps it on the market. That's how they get paid.
Exactly.
Diluting by the company itself, right? Which is what you're saying here.
Yeah, XRP has like 100 billion coins or something, some crazy amount of coins that they can dump on the market. So they just sell into strength. And I really don't trade crypto. It's not my thing. I like to have my weekends.
All right, last request then. Platinum.
Platinum. I'm not even sure what that ticker is.
Can you have TrendSpider added to Motive Wave? Someone I know is using that Motive Wave program. Can you
not currently
marry the two?
Not currently, but we do hope to have like brokerage integration, in the future where you could hook up, another platform that has the ability to buy and sell, and you'd be able to integrate your data into
I'd sell the platinum Amira, but what do I know? I'm just a blind squirrel in the middle of a snow-covered forest,
I don't
wearing
know. I mean,
shades.
I don't really look at platinum, to be completely honest with you. I mean, it's, yeah,
Yeah,
if this is the right, I'm assuming this is the right one. I
it
really don't
is.
even know the XPT USD.
Yeah,
Yeah, I mean, it's definitely like, it's definitely got this kind of bottoming formation. I mean, you definitely need to start breaking through these pivots here, these
yeah,
previous highs. But um, if inflation just keeps doing its thing, then I think
yeah,
anything can really move up on this just as a function of inflation. So
yeah,
um, we'll have to see. I mean, silver, gold. I think silver is probably going up more, not because Wall Street Bets is buying it, but overall, we needed to fill this gap first of all, which seems to be happening today.
yeah,
But over the long run, I mean, silver's another example of this. We're not even near these 2011 highs.
yeah.
There's still quite a bit of room. If you start a volume weighted average price from this high, we're pretty much trading right at the average price since 2011. So we'll have to see. If I were to
Yeah.
guess, it kind of looks like something like this. Kind of seems like we're just getting started here. I don't have a position in silver. I traded it. I think from like
Okay.
16 to 25, but I just I have other plays that I like better.
Okay.
And
So why don't you show your website then, Jake, and how people could follow you? You could follow Jake at Trend Spider on Twitter and take Trend Spider on a test drive.
Yep. So if you go to trendspider.com and then you click on the pricing page, you can check out the different prices. If you want to kind of see the different things that we have to offer, if you just go to platform and go to overview, there's a ton of features I didn't even touch on today, just because it's hard to kind of hit all of them. But if you want to learn more, we have the overview, and then we go into each individual feature at the top here. Pricing is going to tell you what you get. So, you've got your elite, you've got your premium and your master, with elite definitely being the most popular. And then you can see which features come with each plan. And I actually have a coupon code that everyone can use. It's DP25. So any prices you see here, you'll get another 25% off by using the DP25 coupon code. So if you're buying a monthly plan, that is, that's good for 1 month. If you're doing a yearly, you can get 25% off the whole year by buying pretty much 12 months up front.
So it should be easy to remember. Dale Pinkert 25, DP 25.
25. Try to make it easy for everybody. So that's the way that you can check it out. We do have a 7-day free trial, so it's not like you just have to jump right in and just buy it right away. We definitely want to make sure it's something that actually works for you. So the free trial is just kind of started once you pick a plan and do all that. So definitely something that's really for technical traders trying to get an idea of what's going on in the market in a different perspective. Raindrop charts, something I didn't really touch on, but raindrop charts, if you want to check them out, just go to YouTube and type in TrendSpider raindrops, and we have an explanation of what they are. But there's a lot of different things you can check out on the platform. It's one of those things that if you're a technical trader and you're looking for an edge or just trying to make the whole process more efficient, this is definitely something I think you'd find interesting. And if you don't like it and it's not for you, then you just cancel your free trial and you move on. You can check us out at TrendSpider on Twitter. If you wanted to follow me personally, it's just at TrendSpider_J. And so if you type in TrendSpider in the search bar, you're going to see TrendSpider pop up, and then I'll be right below it. You can check it out that way and see what I'm looking at. Anything that I'm trading is simply just my trades. Don't go blindly follow them or anything like that. But generally, I'm looking at mostly technicals with some type of laggard into there. So CRM is that example of just looking at a laggard of the whole market. It's nowhere near its highs. Markets, hitting all-time highs last week or the week before. So that's kind of my style, looking for the leaders versus the laggards and then playing the laggard.
Thank you, Jake, my trading warrior brother. Appreciate
Hey,
you being here. Hope 2021 is going to be your best year yet.
Hey, same to you. And once again, just one more time, DP25 for 25% off. Looking forward to the next one, and hopefully everyone has a good day.
Okay, everyone. Thank Jake.
All right, see ya.
And I really appreciate it. That's a wrap. Remember, don't just count your pips, count your blessings. You're welcome. People are thanking you, Jake. All right, so that's a wrap. Don't forget to join Blake for his bias chart coming up here starting soon.
Yeah, and the rest of us. I'm going to open
Oh,
the
yeah,
webinar.
yeah,
again.
and Steve, and yeah, Steve, you'll have to close it because I think you're in control. I only have leave here. I'm glad you're
Yeah, and
here.
I'm going to open the other webinar immediately.
All right, so everyone, enjoy your session with the whole team and get Blake's look on the bias chart, and we'll see you all tomorrow. Adios.
Bye-bye.
Bye-bye.